Hello, everyone. I'm Rob Smith, the Smiths in the Black Channel and Ticker Talker here. And I always love when I get a new audience to show you what I've developed. You're going to hear a lot of stuff, about, different technical analysis. And basically, it's very simple on how things actually work. And it's very, very simple to pick up on algorithmic trading, which is I'm going to show you tonight. But basically, what I want to show you to start off is there's some really basic things where people make things so difficult and you don't have to do that. And what I mean by that is that when you look at any chart and people try and read the charts and try and analyze instead of analyzing the data. So what you want to know, first of all, is that from one bar to the next, all right, there's only three possible things that could happen, all right? And we call those scenarios. It's very simple to understand. So if you look at the middle of my screen, I'll blow it up, make sure everybody sees it. If you've never heard this, you're going to love this. There's only three things that can happen. And you'll notice this bar is an inside bar of this. Couldn't take out the previous high, couldn't take out the previous low. That's an equilibrium, all right? It's consolidation. You couldn't take out either side, all right? The second thing that can possibly happen is that you take out one side of the previous range, and you'll notice this takes out the high here, all right? High or low, right? The scenario 2 is either side. The scenario 3 is one of the most important things you can understand, because when people talk about chart patterns and head and shoulders and all this kind of stuff, scenario 3 takes out both sides. And when you hear people say that broadening formations are rare, it's actually one of the only things that can happen, right? So 1, inside, 2 takes out one side, 3 takes out both sides, all right? So then what we add to that is called time frame continuity, all right? And so what that means is we want to identify participants by price and time, okay? So when people use single time frame analysis, it's flawed. You want to be using multiple time frames. And the reason you do is that the charts are going to present themselves the way they want to. So a 30-minute chart is always going to update on the bottom and the top of the hour. 60 minutes, some software's on the top, somewhere's on the bottom, some updates on the bottom, and those charts look different, right? So when you want to mitigate that problem by using multiple time frame analysis. So what we want to do is we want to go from the opening price. So let's say we go to Boeing, all right? We just started off a month and quarter, right? So if we go here, and you're going to see this, you'll notice that we are lower than we opened on the month, all right? If you go to the weekly, we're lower than we opened on the week. If you go to the daily, you'll notice that we are lower than we opened on the day. And anytime that 60 is red, we have 4 separate time frames where the price is trading lower than it opened. Now, knowing that 70% or more of trading is done algorithmically, and we have 4 separate openings from 4 different time frames, what that tells us is that algorithms have to tell the program what to do, right? There's 4 things they got to tell them what to do. They got to tell them what vehicle, Boeing, buy or sell, right? In this case, sell. How do you want me to sell it? Do you want me to hit the bid or stay on the offer? Because it is going down, they told them to hit the bid. And because it's on 4 time frames, the 4th thing they got to tell them is, when do you want me to do it? Now, right? So one of the biggest mistakes that people make when using technical indicators and oscillators and stuff like that, they're applying the wrong science, all right? Price doesn't move, it aggregates. There's a big difference because movement is physical. Aggregation means that for every buyer, there has to be a seller. For every seller, there has to be a buyer, correct? So the question is, who's more aggressive in getting their price, right? So when we have these 4 time frames going to the downside, we know what they told them. We told them Boeing. We told them hit the bid. Sell, hit the bid, and do it now. So we can pick up on this stuff, and we're going to use macro time frames as well, so we can have real big boys all across the board doing that. So if we go back to the SPY monthly, all right? There's only so many ways price can reverse, no matter what anybody's going to tell you. A reversal is high volume capitulation. Nope. There's only so many ways price can reverse. All right, there's a few other ones that I'm going to show you here. But if you know this, you know what a reversal looks like. Like if somebody says, I'm going to buy a pullback, it's going to be one of these things that I show you, more likely than not, right? So a reversal looks like this. The scenario 2, you'll notice this. The scenario 2 to the upside by taking this out, countered by a scenario 2 in the opposite direction, right? 2-2 reversal, all right? The other way price can reverse is to have a 2 in one direction, then the inside bar 1, and a 2 in the other direction. And the third way that you want to know about is the 3 itself. It rejected up here and reverses back down, right? So we had that. And so if you just knew what I just told you, I'm going to show you how you would have known. Also, there's only so many ways it can continue, right? And that's going to be a 2 followed by another 2, right? A 3 with continuity is actually a continuation, or a 2, 1, 2. That's pretty much it, right? If you want to know what a continuation looks like, that's what they look like. So if you would have known what I just told you, right, back here in 2018, you would have known about this 2-2 reversal on the monthly, right? And the other thing you would have known about is the small cappers. Because at that time, 2018, where are we? Here, the 2-1-2 inside bar back to the downside with full time frame continuity. What did they tell them to do? If we have a reversal, we have them hitting the bid on all time frames. We know exactly what they told them to do, right? And then you have your consolidation. Here, year 1, your measured move down, and then your inside bar and up. So if you go to the spot, would we have known about all this? We would have. This year, what happened? We have a rejection of the bar break 2. Boom, the change in continuity where we can expect this to go outside bar because we have full time frame continuity to the downside. This is going outside. And it's also coming through a previous range. And the reason you want to come back through a previous range is because if the computers are hitting the bid, right? If everybody's hitting the bid, and it might be just regular participants and the algos. When you come back through a previous range, you know you're going to have stops in there because people put stops on known pivots or where they got in. And so what that will do is that when they come back through it, that they trigger the stops. Therefore, they're removing liquidity and there's less stock for the computers to hit. Then you get a disaster like this, right? So it goes 3, SPY, and then what happened? All right. Well, first of all, we wanted to know about this rejection here, right? In February, going up into here. And you know why? Because we had things like the transports. I'll show you the transports here. This is a yearly chart. Now they've rallied back, and that's an important thing to know. Once a 3, always a 3 can't not be. What that means is once you have an outside bar, that means that they were willing to pay up and sell down, and they might do it again, right? That means they're both aggressive. But at this time, with the transports poke up, and then come ripping through a previous range. At that point, since we knew outside bars exist, we knew we were going to take this thing out, right? SPY did it, right? Everybody did that, except the Qs, but we'll get to that in a second. So once it came ripping back through there, and we have the transports, we knew to look into the transports, and once again, IYT, because we know outside bars exist. That's how you properly gauge magnitude, okay? So then what could we look for when they start to tank? Airlines, United Airlines on the year, right? Here's where we knew about this. 2 up, inside year, bam, to the downside here. And it wasn't strong enough to poke up when the transports did at the beginning of the year. So we knew about that below 77.02, and we also knew it on the quarterly. Here, inside quarter, right there, right? Below 80.87. Bam, bam, back through previous range, right? So we knew about that. Then if we go back to this. Now, once again, this is rejecting going into the highs and coming back through, right? So when you have this 3 followed by a 2, this rejection is still happening, right? Boom, here's your outside year, right? Which is a broadening formation on a longer time frame, right? So then what happened? All right, then what happened? Well, while that was happening, who else would we know to go after? Anybody would have these yearly reversals to the downside, right? Like the airlines. Who else? Boeing. Inside quarter to the downside, right here, right? That's an inside bar to the downside, below 320.61. And if you go to the yearly, what do reversals look like? They look like this. 2-2, bam, right there in Boeing. Did we know about that? We totally did. We also knew about this. We also knew to look at through the major sectors. XLE. Last year was an inside year. Didn't even try once they started clobbering this thing. Downside. So oftentimes you're going to see the 3 outside, inside, bam. And the magnitudes to hit this, right? But it just completely fell apart. And that tells us to look at other things in there. Exxon. Bam. So when you have it getting hit like that, not only do we have the continuity on the monthly, weekly, daily, and 60, but we have it on the quarterly and the yearly, right? That tells me big boys are dumping, right? So when you look at the airlines, people are like, oh, you know, Warren Buffett dumped the airlines on the lows. I'm like, no, he took them to the lows, right? We saw him, right? So it's not that hard to understand, right? And the good thing about it is recorded. Sometimes I like to talk fairly quickly, but I want to get through a bunch of this. So what else did we know this year? This year, crude oil went to 0, below 0. UCO, look at this. You see this outside bar here? Boom, there's your 3-2. Here's your outside bar here, 3-2. This is the one that took it below 0, all right? So we knew about that. So then what happened? We got the SPY go here on the monthly. So I'm sorry, and this reversal happened above the 200-day. So if you want to talk about that, we'll talk about that. Because what happened? New continuity change right here. That's a new quarter, right? That's a new month. That's a new quarter. Now you're countering the year, but it's an outside year, right? So we might take it all the way back to the highs because once they take an outside bar, they might do it again, right? So once this started moving higher, right? We got a new quarter. We got continuity back to the upside outside of the year, which is a 3. So we already knew to start buying down in here because we know what they told them to do. They told them to SPY. They told them to buy. They told them to take the offer. They told them to do it now. Anytime that we had full time frame continuity, we knew about that. So the first thing we want to go is after guys and stocks that are taking out the March highs here, right? Why? They got what they wanted. The market's tanking. But when it starts to rally back, guess who's going to get run up their chute? 2-2 reversals. Amazon here, right? And thing about Amazon too, if you go back to the year, I got to move this over. If you go back to yearly Amazon, here's what continuation looks like. 2, 1, 2, right? You're going to have NVIDIA. You're going to have a whole bunch of these things. 2, 1, 2, right? And so when things start to rally back, SPY starts to rally back, right? We know about that. So we would look for things doing the 2-2 reversals because anybody who was short got what they wanted. The market tanked. So as soon as this takes out here, sure you can see the pointer, 2-2 reversal Amazon. Who else did it? Wayfair. Look at this. There's your 2-2 reversal to start the new quarter. Right here, and you're coming back through a previous range, right? And so the other ways we can use the outside bar, this is an outside bar 3. Once a 3, always a 3 can't not be. So if they're willing to pay up and sell down, they might do it again. So they come up in here, boom, back through previous range, short here, right, in February, below that, and then coming back through here, and there's no lower lows until we start to chop around up in here, you see? Who else was a beneficiary? Peloton. Here, 2-2 reversal to start it off. Now remember, you can still go after the SPY because you got continuity and have all this room to the upside, right? Fantastic. If you look at shop right here, you see that? As soon as that took out these highs, now remember what I said about software is going to present things the way it wants to, right? And so outside bars and 2s or inside bars can be in different time frames that's not being presented to you, right? So in this case, the reason we look for this is a 2-2-2 continuation, because this was a 2-2 reversal right here. That went up and went down. You could have taken that right at that point. So when it takes this out, what we're looking for is a compound outside bar that's not being presented to you. So on a 2-month bar, this is an outside bar of that. And so when it takes this out, that's our magnitude. We're expecting to do that because we have continuity. We've got algorithmic buying, but taking the offer. We have every reason to believe that's going to take that out and become an outside bar of that. Every reason. We have the burritos. In the burritos, here you go. Right here on the monthly, right, coming into the new quarter. You already had the new quarter going green right here. And then boom, here's your outside bar giving you magnitude. Here's your 2-2 reversal. Guess what? We're going to take that out at least. And so then if you want to trade a continuation after you've already gotten it down there, either here on continuity or here on the reversal, then you can add on the inside 2-1-2 month, right? So it's not that hard. And the thing is, I'm showing you longer term charts. This happens in everything. It happens in very short term, everything, because it's impossible for price not to do this. All right, it's impossible for not to not do this at all. So you've got Facebook. Facebook did that back there, right? And Facebook also gave you here. You'll see Facebook. What's that? That's a 2-1-2 continuation year. So is Netflix. Here, right? Stuff that you would have known about, because when most people, like when things are getting killed, I'm like, I'm going to try and buy the most oversold for the biggest bounce. Wrong answer. Or capitulation volume. Because if you did that, then you're stuck in airlines and Boeing. All right. There's so much volume in those things. Wrong answer. All right. Crowd. Look at the crowd. Crowd. What's this? There's a 2-2 reversal coming into April. No lower low until up into here. All right. And if you look at the crowd, what you want to look at here, look at this. Look at this year, right? It was bright green going outside. If you go to the quarterly, here, 2-2 reversal in the quarter when it took out 67.56, now 145.13. So once again, when things happen matters, right? So if I go back to shop, right? So in shop, changed the quarter. So right here, shoppy, shop. So right here, right? Because it opened here on the year, right? There's the January. So here, when it started the new quarter, right? It opened the quarter 402.99, right? 402.99. So if you go to the year here, where did it open the year? 402.58. Anything above that, you got full time frame continuity on the yearly, quarterly, monthly, then you get a reversal. There's every reason to believe that's going to work because we know what they told them to do. If we go to Tesla, you can see delayed here, but had the inside month. Here's your 2-1-2 continuation month. Do we know about that? We certainly did, above 168.66. And you'll recall, here's the beginning, here's the new quarter, right? The opening of the new quarter was at 100.80, right? And so it opened up, Tesla opened up the year at 84.90. So once it got through that, what is this? You see this year, this last year? That's an outside year. Rejection, continuation of the rejection on the year, right? 3-2, something you want to know about. If we go to AVGO, and AVGO, once again, here you go. There's your 2 down, your inside, your change of continuity in the quarter, here, back to the upside. There's your continuation inside month to the upside still going, right? So then, we got RH. You like that one? 2-1-2 month, right? Coming into, and this was the delayed move, right? The quarter didn't make it out of here because it got too slammed, right? So the good thing was these are some of the leftovers, right? Here, the 2-1-2 back up. Also, UPS here, right? And this didn't happen till June. But the good thing about UPS is when you understand that UPS is a transport, right? And what happened to the transports? They got clobbered, but they were outside, right? So they might come back. And if they do, who do I want to go after? I want to go UPS once it goes back green on the year, and now it's taking out the inside year back to the upside. That told me everything right there. Don't try and overthink it. Look at this quarter. Inside quarter, boom, changes the year back green and back up 2-1-2 reversal in UPS. You don't even have to overthink that it's a pandemic or anything like that doing it, right? You just got to know what you're looking at and what they are telling you that they are doing. How about Apple? Apple, right here. Here's your reversal month, right? Right there. And so that was the new quarter opened here and then it went, right? The delayed, because the delay was actually the SPY. Here, 2-1-2 reversal, just like it was back here. January back in 19, same pattern right there. It's very extremely repetitive. Once you start to see things our way, you're not going to see anything else again, right? It's just so simple and true. We only trade what we know to be true. It has to be true that algorithms are taking the offer, hitting the bid during these conditions. There's no other explanation for it. That's how you can catch like WIX here. 137.37 coming in May. Boom, off she goes. You can even play these things on reversals when they get higher, right? So if we go to, then what happened? Then not only SPY come up here, SPY do the 2-1-2 here, but then what happened? Goes 1 on the quarter. Takes it into the highs right there. So when you notice it's obviously a lot of NASDAQ, right? We know that. So how did we know that the Qs and NASDAQ were stronger than everything else? I'll tell you, too strong to go outside year. They tried to hit them, right? Here it is. Wasn't very successful if you look at the quarterly, right? So they tried to hit them, and on the year, when the Qs took this back here, right? When they took that back, the opening of 214.40, back green on all time frames. Every reason to believe that's going to go higher, right? And so that's obvious and plain out, right? So, okay, if we go to ZM, now there's certain ways that we look for reversals of combinations. Right? Had you known this about ZM, you would have known this. We look for an inside bar that gets taken to one side but then gets reversed, either in 1 or 2 bars, right? The reason you want to look for that, there's been a consolidation equilibrium, right? One side tried to take it down. When you come back through here, the previous range, you're going to stop some people out and you're going to jam them because that equilibrium attempt to take down failed. When things occur mattered. When did this happen? This happened at the beginning of the year in the first quarter. So as soon as ZM took out 78.49, you got a rev strat quarter, and off to the races she goes. If you want to get a little more razzle dazzle, QDEL. Now QDEL, what do we know about this thing? We knew Then we took out this, was inside year to the up 212, continuation over 75.18, all right? And so QDEL jams them hard, all right? Jams them hard, just 2, 2, 2, 2, 2, and on the month. Now, if you go to the weekly, you can see that corrective activity to get you in. Inside week to the upside, that's a 2-1-2 reversal, right? To the upside. Now, if you also go here and you see this, what's this high here? That's a 2-2 reversal on the weekly, right? It is. And when things occur mattered, right? That happened in the first week of the month. So what that causes, the potential outside month to counter the year, right? Once it starts coming through here with full time frame counting, we're going to take that out. And if we're lucky, we get to take these guys out, which we did. If you go to the weekly, you're going to see the continuation, the 2, 1, 2, and then boom, right here, reversal. Inside reversal to start off the month, and you're back in on the long side. All right, that's how you can really clean house when you know all this stuff. So let's say that, all right, Rob, you're showing me a couple of years and, you know, it might be unique time. Let's say that you're a fund manager that knows what, that's listening to what I'm talking about, and we go back to the yearly SPY. Okay, so if you go back to the yearly SPY, here's what you're going to see. Going back to the 80s, you're going to see a 2. 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 You're going to see a 2, 2, 2, 2, 2, 2. 2 comes back into the range. 2, 2 reversal in 2000. All right, down she goes. 2 down. 2 down. Inside year here. 2003. Kicks in 2, 2, 2, 2. Uh-oh, financial crisis. 2, 2 reversal back to previous range. 2 down. 2 up reversal, 2, 2, 2, 2, back up, right? And when I say that things have compound nature to them, if you notice this, these 3 years were an outside bar of all this, right? There's your broadening formation, higher highs, lower lows, and then these become an outside bar of all that by taking out these lows. And then the 3-2 continuation that you can't see because it's not being presented to you occurs and goes up. So if we go down to today, just break it down to today. What happened? All right, so we're going to have short time frame continuity as well, intraday time frame, 60, 30, 15, 5. What was happening today? All right, let's take a look. Today, what do we know to be true? I'll show you what we know to be true. We know that SPY is still an inside bar. That's consolidating on the month. It's early in the month. It's also the new quarter, right? So how are you going to get out of there? Oftentimes, price discovery will start all over again, right? Because that's what outside bars are, price discovery, and that's how price action works. That's how you gauge magnitude. So we come in, and if we look at 60-minute, you're going to notice the broadening formation here to start off the new month, right? Lower low, higher high, lower low, higher high. Now, if that continues, guess where we're going? We're coming back ripping through here, right? That's a problem because we're still doing our early month price discovery. So when the tweet kicks in and it looks like smooth sailing, you're going to notice this. The outside bar, they take it down, slight lower low, 2-2 reversal on the 60-minute back up to form the outside bar of all this. Then when this goes up and continuity changes on the 60 and comes ripping back through a range, we're looking to take this out and further, if we go to a 5-minute, if I showed you the 3-2, I have. I showed you on the monthly, and I showed you yearlies. Here's how you get on this. Boom, bam, back to previous range. And if that works, right, That's setting up the outside bar 60 here, at least to take out that. But because we know we have a broadening formation here, we're looking to take a lot more than that out, which we did. If that works, it causes an outside day, right? And so when you know what to look for on stuff like that, it's not that hard. So then if we go to, let's go back to our friend Boeing. Why not? Boeing. So Boeing, did we have full time frame continuity? We did once it kicked in. When did we know about this? 60-minute. Here, is that a 2-2 reversal on the opening? It is. And you know why that's a problem? Because anybody who bought on the opening goes underwater right here, right? And if that works, we're looking to go outside of this stuff and maybe even form this. Like so, which gives you the outside bar on the day. Yep, that's what we were looking for. And then the week here. And if you go back to the 60, it's important to know that you can use the continuations to add to your positions. Most people will take a position and then trim and trail, trim and trail. I'm like, no, if you have a winner, I want to pour it on, right? Because we know how to gauge magnitude and we know what the algorithms are doing. And as long as they're still on, we're going to ride them as long as we can. So once this kicks in here, here's your 2-2 reversal. Here's your 2-1-2 to the downside, right? If we go back to the SPY, even at the end of the day, the setup I showed you in ZM, the rejection of the inside bar, right here, 15 minutes, finish off the day. And the good thing about that is when you have a spike in volatility, almost everything is going to do that, right? Because of the futures cash arbitrage, which means that once the futures start going, there's all the natural guys go running out of the stocks and the futures take over and everything looks like the futures, like it did this afternoon. So what's good about that is you're going to get them all to do the same thing. There's your inside bar, you take it out, boom, 2-1-2 into the lows, QQQ. Inside bar, 2 up, 2 down, transports, you name it, you can look around, inside bar, take it up, down. Then if you go to the SPY and you say, I want to be even better at it, Rob. Okay, what's this? Let them have the corrective activity, 2-1-2 off the 5-minute, which takes it back into the lows, right? So once you understand all this, what I'm showing you, things become very clear, exactly what's happening. There's no more subjectivity, which is the enemy of trading. If I've got to sit there and try and figure out what indicator is going to work at what time, or if that's a breakout or if that's not, I'm going to go nuts. But if I can just look at 1, 2, 3 across multiple time frames and be mindful of when this is occurring, it's game over. it's completely different. So we call this the strategy known as the strat. If you are on Twitter, I'm at Robin the Black. We also have a Facebook group with over 2,000 traders in there. Just look up Facebook, the strat. And one of the great things about this is that oftentimes people say, well, I'm new to trading. And I'm like, thank God, right? I don't have to rewire a bunch of brains, right? Because once people learn this and I show it to them, what I ask them to do is use it because it'll make sense to you, right? Complete sense. No more mumbo jumbo of this is my proprietary idea. No, it's one of these things. It's got to be a 1, 2, or 3. It's got continuity or it doesn't. When does this occur, right? And then you come see us, you tell people about it. And my favorite part about it is then a lot of my people will train their children, because children have no preconceived notions about, oh, I think this company's great and I think that and this and that. They don't know. They just do what they're told. So I'm very proud to announce and show my youngest traders. This is Allison. She is now 14. She started trading at 12, and this is Abby. All right, this is her sister. They started AA Trading Partners LLC, and they trade, and they invoice their dad twice a month. Abby's already been trading for 2 years. One of my favorite lines from Abby was, I do a coaching session on Monday nights, and she said, she was listening with her dad, and she said, Dad, can I leave? I already know all this. It's that simplistic. It's like a video game. Once you understand what you're looking at and exactly what's happening, things become crystal clear. No more subjectivity. So at that point, I think I'm going to wrap it up. Been a little under the weather this week, so I'm going to go relax. It's been a long day. Thanks for having me, guys. I know I'm cutting out just a few minutes early, but like I said, I've been a little under the weather, and hopefully I've made a lot of sense to everybody.